Warren Buffett says why you should invest in Ethereum. Hello everyone, we hope you're all healthy and having a wonderful day today. We are your host, Richly. Welcome back to the channel. We're back with yet another mind-blowing video. Ethereum is a great buy in 2021. Ethereum has insane potential to rise. Stick till the end to hear everything about what Warren Buffett has to say about Ethereum. Before we get started, subscribe if you haven't already. Otherwise, Ethereum price will drop and you will lose on your investments. Stick around until the end of the video to know what are comments of Warren Buffett. During the discussion, Buffett stated that Google, Microsoft, and Apple, among others, are amazing firms in terms of capital returns. They don't need a lot of money to start, and they keep on giving. The focus of the financial world over the weekend was on Berkshire Hathaway Incorporated's 2021 annual meeting, which took place on May 1st. They're known for a marathon of Q&A sessions with two prominent nonagenarians, Chairman and CEO Warren Buffett and his longtime companion, Executive Vice Chairman Charlie Munger, covering Berkshire's operations as well as the broader market and economy. They were joined on stage by Vice Chairman Greg Abel and Ajit Jain, who, along with Todd Combs and Ted Weschler, are anticipated to succeed Buffett and Munger as Berkshire Hathaway CEOs. I'm going to focus on Berkshire's general comments around major global investing themes rather than the company's earnings. If you follow financial news on social media or in general, you are already aware of Munger's harsh remarks about cryptocurrencies and discount brokerages, as well as other emerging trends such as SPACs. I've included some of the headline-grabbing vitriol here for your convenience. I believe the entire development is revolting and anti-civilization. Of course, I despise Bitcoin's rise to prominence. I oppose money that is so attractive to kidnappers and extortionists. He also questioned their validity, claiming that they are created out of thin air financial items. Discount brokerages and daily trading gamification, wow, that's flashing the bull's red flag. Something like that should not be attracting investment from civilized individuals and respectable citizens, in my opinion. It's just incorrect. We don't want to generate money by selling products that are harmful to people. Of course, I call it fee-driven buying, SPACs respond. In other words, they're not buying because it's a good investment, they're buying because the advisor gets a fee. And the more you get, the sillier your civilization becomes, and to some extent, it's a moral failing as well, because of the easy money made by things like SPACs and return derivatives and so on. When you push anything to its limit, it produces terrible difficulties for society and gives no credit to the individuals who are doing it or the regulators and voters who approve it. As a result, we believe we have a lot to be embarrassed by in our current situation. This could come as no surprise to anyone who follows Munger's work. Buffett, on the other hand, was far more balanced on these new tendencies, again, in character. He argued against categorizing them as immoral instead of blaming them on people's strong gambling drive. He claims that gambling is a human impulse, and that when individuals have money in their wallets, it's natural for them to want more activity. He opted not to speak on cryptocurrencies at all, leaving Munger to his own devices on the subject. As Graham followers, we like Buffett and Munger, but we believe their critique of cryptos should be taken with a grain of salt. Buffett's silence was understood by us as anxiety about commenting on relatively new technologies. After all, they have publicly confessed that they missed the digital wave due to a lack of context and comprehension. During the discussion, Buffett stated that Google, Microsoft, and Apple, among others, are amazing firms in terms of capital returns. They don't need a lot of money to start, and they keep on giving. They just bought an Apple in 2016, and while they have gained handsomely thus far, it was a rather late stage in Apple's development. However, we thought their cautions about cheap brokerages and SPACs were reasonable. Writing options is inherently hazardous and may have devastating results. Therefore, novice retail investors dabbling in calls and puts doesn't sit well with us either. At the gathering, Buffett reaffirmed a key tenet. I do not believe the average individual can choose stocks. He followed it up with some simple drawings in his usual manner. He noted that none of the top 20 firms in terms of market capitalization in 1989 are still in the top 20 now. He also pointed out that even in a flourishing sector like autos, over 2,000 firms went bankrupt in the previous century. There were just 3 remaining by 2009, and 2 of them had to be rescued from bankruptcy by the U.S. government. He reiterated his long-held advice to ordinary investors to simply invest in an S&P 500 index fund. There was a lot more to stock selecting than predicting what would be a great business in the future. Both Munger and Buffett agreed that Jim Simon's Medallion Fund was very, very smart when it came to quants. Even Munger, who is typically stingy with praise, didn't hold back. Extremely brilliant and very wealthy, yeah. They did say, however, that it wasn't for them since they didn't know how to make money trading stocks and couldn't trust anybody else to do it for them. Humans are not excellent investors, which is one of my key beliefs. Even professional fund managers, according to history and research, are unable to outperform their benchmarks over long periods. Even the most solid investing frameworks are eroded by fear, greed, and innate emotional bias. In reality, it applies to specialists in a wide range of areas, including macroeconomics. Munger chastised them for being overconfident at the meeting. Of course, professional economists have been taken aback by what has occurred. It reminds me of Churchill's assessment of Clement Attlee. He was a very humble man and had a great lot to be modest about, he added, and this is precisely what has occurred with professional economists. They were so sure of themselves in every way, and it turns out the world is a lot more difficult than they imagined. Despite their reservations, we believe that if Buffett or Munger had begun their investing careers in the 1990s or 2000s instead of the 1940s and 1950s, they would have been firm technologists, both for their investee businesses and for their investment operations. As a result, we must consider their remarks in this light and absorb the concept underlying them rather than the exact meanings. The worldwide cryptocurrency market is continuing to rise, with a 3.5% increase today to $1.68 trillion in the early hours of the day. Today's trade volumes, which are down 15%, remain erratic, reflecting investor apprehension. The larger market, on the other hand, appears to be enjoying it, with Ethereum rallying ahead of its EIP 1559 network upgrade. As the day drew to a conclusion, Ether soared above the $2,600 barrier, gaining 7%. After continuing its relief bounce from the previous week, Ether has gained 21.5% in a week. Ether brushed over the $2,530 barrier level while closing in on the $2,620 resistance level. It has found support at $2,330. After being in the negative for the majority of the day, Bitcoin finished at a monthly high of $42,150. After clearing the first hurdle at $41,800, Bitcoin is going for the resistance level at $42,800. It now has support levels of $39,000 and $37,300. The number of Bitcoin trades fell by 27% on the day, indicating that short-term investors are looking to cash in on the surge. After months of intense anxiety following the price fall in May, Bitcoin's weekly rise of 22% has moved CNN's Fear and Greed Index to the greed side. Polkadot and Solana both had substantial increases of more than 10% among the top 20 cryptocurrencies. Cardano, Uniswap, Binance Coin, and Chainlink all had mild gains of more than 5%. Bitcoin can retest its 38,000 support level in the next week. For Bitcoin to maintain its momentum, it must stay over $42,000, which will result in big gains in some of the altcoins. In the face of an imminent death cross, $2,500 remains a tough nut to crack for Ether. The price of Ethereum is still on an 11-day rise, although it had been stopped below $2,500. Amid a hash rate recovery, Ethereum awaits the August 4th update. Due to an imminent death cross on the one-day chart, the coin is in danger of a bearish reversal. Ethereum price is locked in a small range around $2,450, possibly considering the next move, amid slow activity observed across the crypto market this Saturday. As a result, the price of Ethereum extends its 10-day winning run, hovering at monthly highs slightly below $2,500. The world's second most traded digital currency continues to attract buyers ahead of its update, known as Ethereum Improvement Proposal 1559, which is slated to go live on August 4th. The update is likely to change transaction prices while also lowering the quantity of the Ether token, thus driving up the price of Ethereum. Furthermore, the rebound in hash rates maintains the optimistic tone around Ethereum. Ether to USD is now trading at $2,463, essentially unchanged on the day. Every week, Ethereum is up 14%. The daily chart of Ethereum reveals that the price is lacking in rising momentum as bearish wait for confirmation of a death cross formation. With a confirmation on a daily closing basis, the 200 daily moving average is likely to cut through the 50 DMA from below, indicating the possibility for a significant sell-off. The death cross confirmation might signal a bearish reversal, with floors opening near the junction of the 50 and 200-day moving averages near $2,140. The July 7th highs of 2,411, below which Friday's lows of 2,318 may be challenged, could provide early support. Should the negative pressure continue, the $2,250 psychological barrier might come to the rescue of Ether bulls. With the 14-day relative strength index remaining above the midline, Ether buyers may be able to ignore the death cross warning and continue the rally to retest $2,500. The 100-day moving average at $2,538 is the next meaningful bullish objective. Above the latter, Ether bulls would seek new entry, exposing the $2,600 round figure. Let us know if you think Ethereum is the future of cryptocurrency. Do you agree with Warren Buffett on Ethereum?